Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because we've seen amazing Bitcoin strength during this S&P 500 sell-off, and this is not how Bitcoin would have traded during an event like this even 2 years ago. We've seen Bitcoin hold pretty firm as stocks lost $5 trillion in value during this Trump tariff sell-off, and $5 trillion is almost double the entire crypto market cap. Now, I do think it's too early to conclude that Bitcoin has officially decoupled here and it's going to do whatever it wants going forward, no matter what we see from traditional markets. But it is a nice sign of strength regardless. Now we just have to see if it's going to follow through. But it is pretty mind-blowing looking at this correlation and how close they've traded historically compared to what we saw last week. Looking at this chart, you'd have no idea which one is magic internet money and which one is the 500 largest corporations in the United States. Now, could Bitcoin just follow through next week and do the exact same thing? It could, but as of right now, I'm liking what I'm seeing, and this is why having a plan and sticking to it is so important. If you're just relying on news headlines or sentiment and how you're feeling day to day, it's going to be very hard to make good decisions during these time periods, so having a plan and sticking to it is incredibly valuable. That's why I wrote about my plan in Monday's free weekly report, which I always put in the video description, and a new weekly report will be coming out on Monday where I'm going to be making some portfolio changes. But as of right now, there's no reason to make any changes to the plan. Bitcoin is still holding above our 50-week moving average, which historically has been the line in the sand during bull markets. As long as you're above it, Bitcoin is in the clear. Once it gets lost, you are very likely in a bear market and it's time to perhaps change your strategy depending on your situation. And as long as Bitcoin is below 90K, I think it's too early to be getting too excited that we're going to skyrocket tomorrow because we still have to reclaim that crucial resistance level. So right now, my plan just calls for some small portfolio rebalancing, but no reason to make any huge changes quite yet. And I know it can be incredibly tempting to make huge changes to your portfolio when sentiment is this fearful. Everybody was clamoring and fighting over Bitcoin above 100,000, but now that it's in the low 80,000s, everybody's fighting for the exit door. And that's really not surprising when we take a look at what we're seeing from the Economic Policy Uncertainty Index now hitting the highest level we have seen in the past 50 years. And this much uncertainty in traditional markets is definitely carrying over to Bitcoin. And you can see the amount of fear being spread by these headlines. Bitcoin falls towards 80K and prints death cross, which sounds terrifying, but it's really just two moving averages crossing over each other. We also have this one here saying Trump Liberation Day tariffs create chaos in markets. Recession concerns. This one with sunglasses and an explosion reminds us that this is the worst quarter since the FTX collapse. And you're seeing these lower and lower price targets. Bitcoin price risks drop to 71K as Trump tariffs hurt US business outlook. Actually, 71K is a bit high. Let's change it. Bitcoin crash risk to 70K in 10 days is increasing. But when you zoom out, yes, the narratives are concerning. Yes, sentiment is fearful. Yes, everyone is scared right now, but Bitcoin has been going sideways for almost a month and a half, and we really have been in the same trading range. But for me, I like to have a simplistic, more long-term, zoomed out view. If we lose this 50-week moving average here, we can talk about bear markets, we can talk about downside, we can talk about concerns for this asset class as a whole, but as long as we're trading above it, I don't see the need to jump to that conclusion. If Bitcoin reclaims 90K, we can talk about an early cycle blow off top into late May or perhaps June, where this rally catches everybody off guard and everybody is forced to pile back in because they panic sold during this stock market sell-off. And the third and perhaps most painful scenario would just be more sideways chop, wrecking investors in both directions, especially those that are selling in and out of the market or trying to trade with leverage. And maybe we don't get a conclusion until later in April, and we'll have to see where Bitcoin goes from there. But this week has been one of those very rare events that you don't see very often. Bitcoin showing strength while the S&P 500 is falling off a cliff. The only other time we've seen something somewhat like it was in October of 2023 when the S&P 500 was finishing its multi-week sell-off, but Bitcoin started rallying even while the S&P 500 was still selling off, and then the S&P 500 reversed. I don't think this is going to play out the exact same way, but this is one of those rare occasions that doesn't happen very often. So Bitcoin's price action over the next 2 weeks is going to be incredibly important to monitor to see if we do see it fall the S&P 500, or we do see the early innings of a new narrative developing for Bitcoin and its new relative strength. And this strength is especially impressive because we're not seeing huge outflows from the ETFs. I would have expected the ETFs to make Bitcoin even more correlated to stocks because investors are holding these ETFs in the same brokerage where they hold their S&P 500, their bonds, their gold. So the fact that we haven't seen huge outflows this week is quite impressive in terms of investors having a long time horizon and not panic selling their Bitcoin because stocks are going down. And I think this headline sums it up quite well. Bitcoin bulls defend 80K support as World War III of trade wars crushes US stocks. As for my portfolio, no changes made since the last video, but I'm probably going to do some rebalancing on Monday, and I'll write about that in the free weekly report because that's what my portfolio system calls for. If you want to learn more about my portfolio system, it's 67% complete. So we're going to have early bird pricing for about 2 more weeks as I make the final modules. And I'm very grateful for all of the positive feedback. It's great to have a place where I can finally go more in depth into my portfolio system, mental frameworks, and common mistakes I have made in the past and see so many new investors making. But as we look forward, the global liquidity data still looks quite good for Bitcoin. We don't know if it's going to be a 75-day lag, 85-day lag, 105-day lag, but if we do see Bitcoin follow this global liquidity move eventually, that would align nicely with a new rally into all-time highs in the near future. We are still seeing an aggressive downtrend in the US dollar index, which is good for global liquidity. Hopefully this big wick below the 200-week moving average isn't a sign of reversal where the dollar index is going to rally higher from here. We really want to see continuation to the downside if we're going to see global liquidity continue higher, and perhaps these additional rate cuts that the market is pricing in could be the catalyst for that. Because of the weakening labor market and the sell-off we've seen in the stock market, we're seeing the market start to price in more of these rate cuts. We started this year off with only 3 rate cuts priced in for 2025. Last week, that got upgraded to 4 rate cuts priced in. The market is now pricing in 5 rate cuts. And if this continues for much longer, I think the Fed is going to be forced to pivot their policy a lot sooner than many investors are prepared for. Now, they still have stubborn inflation stopping them from doing it immediately. Their preferred measure of inflation, core PCE, did increase by 0.1% in the last reading, and it's now coming in at 2.8%. We did also see some weakening labor market this week with the unemployment rate print coming in at 4.2%. 0.1% above the previous 4.1. So this could give the Fed some leeway as well. But of course, the big one is the price action we've seen in the S&P 500. This big of a drop in stocks is very deflationary and very bad for the labor market and the economy. So it should force the Fed to pivot and change its policy quite soon, especially if this rate of change continues. I mean, this is an absolute ridiculous weekly candle, down almost 10% in a week. We saw nothing like this in 2022. That was more of a slow and steady sell-off. This is a lot more similar to what we saw in March 2020, and we know that forced the Fed's hand quite quickly because of how aggressively the S&P 500 was selling off, and it makes Bitcoin's price action last week even more impressive. And I know many investors are ignoring the bullish developments because prices are down and there's so much uncertainty in traditional markets, but we are seeing more and more states joining the Bitcoin reserve bill trend. We just saw West Virginia join the party. We saw Alabama and Minnesota lawmakers join US states pushing for Bitcoin reserves as well. We now have 26 of the 50 states doing this. The US committee passed the Stable Act, which is stablecoin regulation. So now we're going to see if it's able to pass the full House vote. And we've been watching this whale accumulation of Bitcoin, something we tend to see in bull markets. And usually the bull market doesn't end and the top is not in until we see those large holders start to offload that Bitcoin. But we have not seen that quite yet. If anything, this looks like a reaccumulation, just like we saw in Q3 of 2024 and Q1 of 2024 when Bitcoin's price consolidated and we saw a huge increase in Bitcoin holdings by large addresses. And you can see that in early 2021, that started plummeting aggressively as they sold off their Bitcoin and took profits into the distribution top. We have not seen anything like that recently. So for me, I believe Bitcoin is in a fair value range. You're not buying an incredible discount or a huge sale, like if we were to be trading closer to Bitcoin's 200-week moving average, but you're not FOMO buying the top when everybody is clamoring to buy Bitcoin above 100,000 because of strategic reserves and Michael Saylor and ETF inflows. And because Bitcoin is in what I believe to be a fair value range, I'm not tempted to make any huge purchases or make any huge sales here. If anything, I'd rather just sit on my hands and see what Bitcoin decides to do. We are still holding above the major support level that I expect Bitcoin to hold. I still think it's unlikely that we see the low 60,000s. I know many people are calling for it. I know many people are waiting for it. It is definitely possible. It's just not my base case because Bitcoin continues to hold support. So we'll see what happens. We have our invalidation right below price with the 50-week moving average. We have our risk on signal right above price, which would be a reclaim of 90K. Otherwise, it's probably going to be more pain and chop sideways in the short term, which I know frustrates a ton of investors, but this is something that Bitcoin does all the time, and it just wrecks altcoins and leverage traders every time during those consolidation periods. And speaking of wrecked altcoins, Ethereum continues to trade back into its old range from late 2022, early 2023. It's not surprising that Ethereum and other altcoins are struggling. Bitcoin has been holding up well with all of this macro uncertainty, but things further out on the risk curve obviously would struggle more. We're now going to wait and see if it's going to go back to its mid-range, or if it can reverse sometime here in the near future. As of right now, it looks like it wants to go lower first. We are losing macro support on the Ethereum Bitcoin pair, which is not a great sign. We really want to see these December 2020 levels reclaimed quite soon. As for Solana, not much better. The only saving grace here is that we're holding the 100-week moving average and we have the 200-week moving averages right below us, but it is looking like it's gearing up to close below its major range low that it's been above since February of 2024. We do have the Solana Bitcoin pair sitting on support here, and you would expect a bounce at this level, but obviously altcoins will continue to struggle until Bitcoin reverses. It has been a very tough year for altcoins, with Solana sitting down 30% over the past year, Ethereum down over 45% over the past year. Even the S&P 500 and NASDAQ are now negative year over year. But look at Bitcoin just holding up 20% above where it was trading a year ago, which is quite impressive when you compare it to both safer assets and riskier assets. But I do think that we could see a nice altcoin move if we do get that final blow off top rally for Bitcoin. I know the word alt season triggers a lot of people right now because of how painful it's been to hold altcoins, and I don't think every single altcoin will go up. It will be the few that have good narratives, whether that's stable coins, which continue to be in a bull market. We saw stablecoin supply surge by 30 billion in Q1, and I think the chains that have these stablecoins on them will benefit. We saw Ethereum cross $3 trillion worth of stablecoin transactions, even with Ethereum's price going down 45%. And these stable coin supply charts look like they're going to continue going in only one direction as there's more and more demand globally for US dollars. And the other main narrative I'm watching is RWAs, real world assets. I do think these major asset managers like BlackRock and Fidelity are going to try to tokenize as many assets as they can. So I will continue monitoring real world assets and stablecoins as the two main bullish narratives I'm watching out for right now. But no matter what the narrative is, altcoin price action is going to depend very heavily on what Bitcoin does. And as long as Bitcoin is chopping in a range, altcoins tend to struggle. You really need a reclaim from Bitcoin and an uptrend in Bitcoin if altcoins are going to show any signs of life. But as we look forward, the federal government is still running huge deficits, and any of the damages being done to the stock market and economy today are only gonna worsen this trend once the Fed is forced to step in. And as long as we see these deficits worsening, I expect to see more exponential debt growth and more exponential money supply growth. And as the money supply continues to be debased, I expect risk assets that we price in the money supply to go up in value as well. And this is something we've seen from the S&P 500 many times. You have these very quick and aggressive risk off events like what we're seeing right now, but it forces the Fed to step in even more aggressively each time, and we end up getting these steeper and steeper slopes in the debt increase. And I think we're probably going to get one huge finale with an even steeper increase in the slope of debt issuance, and that could be the final major blow off top in this multi-decade S&P 500 bull market, but we'll continue to monitor the data and see how that plays out. For now, I remain bullish on fixed supply risk assets like Bitcoin that don't have to worry about tariffs and that can be held by investors easily globally to protect themselves from currency debasement. But as always, let me know what you expect. Is this just temporary strength from Bitcoin, or is this the dawn of a new bullish Bitcoin narrative where it can be seen as a bit more stable during these type of events? As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.